Hello, everyone. We're going to go ahead and get started. Some people will be filing in, but I'm just going to be kind of going through everything and then jumping off as it's already pretty late. In the evening, it's 9:30 Central Time here. I've had a hell of a day, as you all know, with some rental issues with the sewage. So I'm going to get in and get to it. So if we look at the S&P here, we got our fib sequence here on this swing low to this swing high, right? Which just so happens, guys, by the way, look at this swing low right at this fair value gap, right? Here on SPY, right around 409, big fair value gap there, all the way up to 524, which is obviously our top. So from swing high to swing low here is obviously our current Fibonacci sequence. We retrace down into our 236, which about 2 weeks ago I told you guys I think we were going to W back up. And I think inside of this W, we have, that's why I always say the bear and bull case right now both lead up. So in my opinion, this is about what we'll see. Wouldn't be surprised if we didn't go all the way to 480, but I definitely see 497, 500-ish. Again, one more time before we do this. Remember, the market moves in waves, but this is looking great. A small W right here inside of an M. Don't be surprised if this goes a little bit further. And you all know I'm overall bullish, right? So I don't, if we invalidate this M, so be it if we want to go higher, but I still think that this W will then lead to a wider M down to at least another 236 test or even deeper to a 382 before we go to 550 before the end of the year, in my personal opinion. So, but this is looking good. As long as we can get above 511.45, I think we'll see 520 this week with pretty much relative ease. Let's look at what futures are doing. No, this is not what I was trying to look at. Sorry. Yep, and futures would be above that right now. So looking solid. Yeah, looking solid. Let's see what tomorrow opens. But nice open on futures. You all know I don't think futures mean much, so I'm not going to get overly excited that it's generally bullish. The one thing that's interesting, we go back to SPY here. We're trying to get up to this fair value gap at about 519 to 524. And if we go over to QQQ, for example, if I go over here and I go to QQQ, if we go over to QQQ, if we leave SPY and we go to QQQ, you'll notice we're already in this tough fair value gap that we created here. And we're trying to get through it, right? But the same exact pattern here on QQQ. This thing didn't even go down to its 236, which I find interesting compared to SPY. All this did was W into some deep fair value gaps, and it looks like we're in this meat and potatoes of this 430 to 436 zone. If we get through that, I think we'll see 450 pretty easily. So looking good. Again, above 511.45 on SPY, and I like our chances of overall bullishness. Okay, let's look at some of our obvious plays, right, guys? So snow. I'll switch to my 1 hour chart here just really quick because you can see the inverse head and shoulders a little bit more. Not that again, you guys know how I feel about patterns. They're fine, but liquidity, fibs, gaps, your areas of liquidity matter a lot more than any pattern. But yes, there is a very clear and obvious inverse head and shoulders. I pointed it out 2 weeks ago that I thought we were forming an inverse head and shoulders here. I said after this bottom off 143 that we'd go back up to 160, and I think we would dip down more still before ripping. So that played out to a T. Love to see that, but let's switch back to the daily. So, oops, let me get rid of my marker there. Clear move down here. This is a super bullish move, right? You get a big dump like this, but a wick off of this fair value gap, which by the way, this fair value gap's been present since April of 23. This is a extremely strong area of buying support. Notice that we've never candle closed below it since it was created. So since the algorithms created this fair value gap, this bullish imbalance, whatever you want to call it, right? What's his nuts? ICT on Twitter has convinced people he invented fair value gaps, but all it is showing you bearish and bullish imbalances on a chart. So this bullish imbalance was created, and notice every time we come down into this area, we've never closed below it. We've even wicked below it, but look on that day, it still managed to close above it by $2. So every time we come into this area, super strong buying comes. So not only that, but we have a super big fib here, the 114, the 143 here. And so to me, this was a huge buy area. This is why I doubled down here. Some people got scared. That's okay, and closed their position, but that was literal bottom. So feel bad for anybody that did that. But rocketed off of this so far, and we've had some trouble here because why? There's a bearish imbalance here. But the fact that we're staying here instead of, notice last time we came down here, we dumped, we tested again, we dumped real hard. The sell orders were just too strong here to hold us up. Now what's happening? They're not sending us down. Now we're staying up here. I have no doubt that we'll see 164 this week. Pretty easy. If we can get over 164, there's very little liquidity holding us back from 170s, 174-ish. So that looks great. Earnings at the end of the month. Almost like it would be holding completely through it. Shop, another really nice one in my personal opinion. It'll be interesting to see if this W plays out perfectly or if we actually need to come back down one more time. I don't think we will. This was really bullish to end the week. So perfect move down here off the 200-day moving average, double bottomed off of it, formed a W on it twice, came down here. We needed to get over this buy side liquidity in the 382 fib. We did. We closed over that on Friday. Now we need to go over this 7508 buy side, and we should see 80 plus pretty darn quickly. 81 feels like a foregone conclusion, but I wouldn't be surprised if we see 90s with earnings on, I believe, Tuesday. Or maybe it's Thursday. Let me give you an exact date on that right now, quick, before we move on. Yeah, the chart looks fantastic. The order flow looks fantastic. With earnings coming up, like you all know, I say all the time, the chart makes the news at least 95% of the time. Of course, not all the time, but 95% of the time. Shop earnings are Wednesday pre-market. I apologize, not Tuesday. Wednesday pre-market. So that'll be great. We'll go to bed Tuesday, and Wednesday we'll wake up and we'll figure out everything from there. But love Shopify. It's looking really good. For bullishness to the upside. CS, I'm not in anything right now, but this is another chart that looks fantastic. We came down here to this bullish imbalance here. So again, this huge candle, guys, here, this is an easy example of showing you guys these fair value gaps, as they're called, or in my opinion, just bullish and bearish imbalances. So you have this candle right here, this massive candle here, and then this candle here. So everything between, this is any fair value gap or bullish bearish imbalance, it's a 3 candlestick pattern, right? So this candle here, this little candle here, I'll circle it, the huge fat candle, and then this candle. So when these imbalances are left, notice this candle and this candle's wick never come in between this area, right? So this is considered an imbalance because either before or after, no trading was done in this price. So there's a ton of unfilled orders, and this was a upside candle to the upside in here, which is why you've seen it come down, get bought up, move back up. I would like another move down, frankly, off of this sell side liquidity here, and a move up to create a nice daily W. And it just makes sense from a chart perspective, right? So here's another one. Oops, easy example, but to the inverse. Candle here, candle here. Notice a bunch of untraded area. And now look what's happened as we've come into this multiple times. Sell, sell, sell. We are getting higher. So I'd love a little dip, and I think we move through. But yeah, so that's very basic, but you should be able to see, right? So candle, 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 bullishness. I'll do a whole class on that. This is just a weekly watch list, but that is a very rudimentary. I'll actually go through, draw them, show you guys all that, but that's a very rudimentary explanation of bearish and bullish imbalances. But anyway, Celsius. So assuming we come down here, I will look to grab some off 7180. I'm not itching to get in at 76 right now. If we could move past this fair value gap at 77, 78, then I would get in, but I'm not going to rush in right here. I'd like to move down first. Okay, that's Celsius. Let's look at some others. Coin here. So again, guys, this is another perfect example of what I say all the time when we're talking about stuff and everybody wants to talk about, oh, not NFP comes out today. Oh, GDP comes out today. Oh, coin has earnings today. None of that really matters. They might use it as a catalyst to fill what the chart's already telling you, but none of it matters, right? And coin and Tesla are the perfect example. Coin double beat, guided up. And when I say coin double beat, I actually don't know if I've seen a better earnings report than coin had this quarter. And then, like I said, they guided up. But I told you guys before, I wasn't playing it. We have a giant imbalance down in the 190s. So here's where I believe the majority of the algorithms want to trigger some intense buying, because they missed out at the end of the day. They missed out on this move here, and there's a bunch of unfilled orders, and the chart is bringing us down. But not only that, we were bear flagging inside of a giant bearish imbalance or bearish fair value gap, whatever you want to call it. And I've been saying for months, unless we move past 240, the 618 fib, which is, remember, one of our master fibs, unless we can move past the 618 or 240 with some fucking oomph, not chop, I don't want to trade this. And then what did we do off earnings? Double beat, boom, bear flag down. And all this did was bounce off the 50% fib, which I tell you guys is just a trampoline in one way or another. All it did was go back up, test the bottom of the flag, confirm that it's bullish, reject off the 20-day moving average, and sell off. Now, it did hold the 38% of this Fibonacci sequence, but this is a much weaker sequence than the white one. So again, for me, it's really simple. Unless we take out this bearish imbalance and we move past 240, I don't need to be in this, because right now this is just eating premium. And you guys know I don't really day trade. I mainly swing trade. But if I was day trading it, I'd wait for another move down to 218. And I would sell anytime inside of this gap right now, because this is causing a lot of selling. So you all know I'm a big bull on coin too, right? But I'll buy down here. I'll buy in the 190s or over 240, right? It's what I always say when you guys want to blindly average down on things. For example, like on snow, when I waited until we got that imbalance move down to the 140s, the R here sucks, which means risk to reward. There's nothing on this chart that's telling me I need to play this to the upside. And right now, I believe the overall market structure is taking us up. So I'm not also going to counter trade something to the downside. Because look what this has been doing. This has largely just been chopping down, right? And we all know how coin moves. I don't need to be in puts in this either. So for me, this is a wait and see, but I think this is a great example of what I tell you guys all the time, as is Tesla, which is the chart makes the news, right? Tesla, double fucking miss, guide down, gap up 2 days in a row, 2 weeks in a row off their earnings. So let me say that again. Double miss, guided down, the stock rocketed from the 130s to almost 200. It hit 198.86. Giant sell side liquidity, by the way, right there in the middle of this fair value gap, or buy side liquidity. I apologize. Huge area right here. This 198.86 will be huge for bulls if they actually want to get serious here. That move's huge. But again, I'm not playing Tesla. I have nothing to say about it. Besides, this is another great example of the chart makes the news. So, okay. I don't have anything else, guys, that I want to go over. I want to keep it simple. We'll talk about Starbucks just because I know Nate. In the chat, I see sent it in. He's a big Starbucks fan too. They just had, in my opinion, their worst earnings in probably since COVID. I think we're going to 71, which is when I will add the rest of my swing position for the 2026 calls. That's basically collateral for me. And by that, I just mean collateral is a poor word. That's more like a share play almost, cheaper than buying 200 shares, 300 shares, however many contracts you get. The cons are super cheap too. Like 300 a pop right now. So $300 a pop. So, but I am not full position. I'm waiting for 71, but in 2026 date for a reason. I think this play will take some time, but nobody's going to stop drinking their sugar water. So I do like Starbucks, but I think it needs to go to the 707 first. So, but I do like this. Yeah, I'm still buying shares of SoFi. So SoFi, wait for all my drawings to fill in here, is just fucking refuses to lose this pattern in either direction. I bought more off 675. If we happen to go down there again, I will buy more. Yes. SoFi is the only stock in this price range that I buy consistently. So yes, medium topping. I will continue to buy SoFi. We have so much bearish imbalance here to get through. Before I'm gonna sit here and be a mega bowl. When we get over 10 one day, then we can talk about it. But I mean, you can see all this. This will all cause algo selling as we move up. So, but these do have to fill too. So, the algos will fill these areas as we move up. When you say buy, you buy option leaps like long term. Yeah, I mean, so in the group, I said I was buying Starbucks 100 calls with January 2026 as the strike date. So, yeah, those are definitely considered leaps. So, they don't expire for a year and a half. So, yes, they are leaps. But for example, with snow, I'm in snow calls. I'm in September of this year and January of 2025. Same thing with shop. The January ones are still considered well, that's still more than 6 months away, right? Yeah, so it's still considered elite, but that's just my style in general. Efron, I play longer term options because time can make up for a mistake. I was right about snow. We got in right about here and we couldn't break out. We were up nice here, but I refused to leave. We came all the way down here. If I was in weeklies, I was cooked. If I was in monthlies, I'd be sweating, right? But I have 158 days left on the Septembers and 200 plus on the Januaries. So I'm chilling, right? Like everybody asks me all the time how I can be so chill. How could I not be chill, right? I got plenty of time. So I always say time allows you to be wrong, which for whatever reason in this stock game, everybody always wants to be right. And they want to be right away, which is just not how it works. So I have a Jan Apple and a Jan Google. Sure, let's look. We can look at Apple and Google for you. Let's pull up Apple first. So Apple, obviously a huge gap up off earnings, right? I went over this last week in class. Actually, I feel good about class last week. I said I will definitely be an Apple buyer into earnings. So history might not always repeat itself, but it always rhymes. So we went a little lower this time, but we had the same divergence on the RSI we had the same bullish divergence on the chart with the RSI. Coming into earnings, we came down to this fair value gap, held above the 50% fib, created a fair value gap, I might add, into earnings, and managed to stay above what? The fib I always talk about, the 382, 170. Everything about this chart was telling you that Apple was going to go up. Yet everybody wanted to short it. And then what did Apple do? It gapped up so far up. It closed above, even though it opened all the way at 187 and went down to 183. It still managed to close above its 200-day moving average. But I said it all day on Friday. So now we have this giant bullish imbalance on the chart. But I said it all day on Friday. I would be waiting to get into Apple at the 236. If I wasn't already in it, I'm already in it. But if I wasn't in, I'd be waiting for it to come down to 180 or 181, the 200-day moving average, which at this point they're the same thing. At this point, 180.92, 180.19, like toss a coin, it's the same fucking thing. But this 236, if this holds, full send to the upside off Apple. And I think we can get over 189. So if you're in January Apple calls, I mean, you got to be up, MT. I don't see how you couldn't be up on those unless you bought like up here. I genuinely don't know how you couldn't be up on those. So yeah, okay, you're up. That's what I thought. I was like, brother, if you aren't up, bro, like where the fuck did you buy these? Yeah, but you have till January. So remember, like the your delta to theta ratio and your intrinsic value on those contracts is still solid because there's so much time left. I mean, Apple could easily see 200 before January. That's what you always have to ask yourself. So as you get closer to January, they're going to lose value because if we're not trending closer to 200. So for me, bro, if I was you, a close below this 236 fib, this 180, I would take my profits and I would get into something way closer to in the money, like 190s, if you were looking to play Apple. So, and then you wanted Goog, sure, yeah, let's look at those. You're in Goog, you didn't say what you were in Goog. Are you up on the Googles? So Google, same thing, right? It dumped the day before earnings, but what did it do? It came and held this one fib, and it started acting as, and by one, I literally mean one. I'm not just saying, oh, this one random fib. No, the one fib of that sequence. So from this high to this low, which we've come and we've ripped below, I actually can put a new Fibonacci sequence off this wick. But I want to see if we just look at how well fib extensions work too, guys. By the way, let me just zoom in on this. So this sequence I drew from this swing high to this swing low. And this is why I always tell people to zoom out. I see people doing like a 50 here, 50 here, 50 here. I'm like, what are you fucking doing? And algorithm's not trading off of some little bitch ass move like that. They're trying to catch the fucking move. So zoom the fuck out, swing high to swing low, or swing low to swing high. In a minute, and by minute I just mean soon, we will be able to do from this swing low to, if this is truly the local top, we could put a fib there, we could put a fib from here to there as well if we want more than one sequence. But anyways, look how well these extensions work. That fib is all the way back from there. Look where we topped out at, right at this 272 extension, and look at where we're trending back to, right here. We also created a bearish imbalance directly on this fib. You can't tell me that the algorithms aren't trading based off Fibonacci. Anyways, Google. So are you up on the Googles, bro? Yes. Okay. So, created a nice bullish imbalance here on Google. We're holding the 10-day moving average, which is 164.62. I would probably use that as a stop loss, 160, and then give yourself some range. So 160, a daily close below 164. I'm taking the profits on those. Over 170, Google's going to minimally go see 175. So it's going to go test that high again. There's nothing holding it back. That's why you'll hear me. I always famously say, and I shouldn't say famous, I'm not famous, but I always say, and people get confused, but you need to remember the chart is telling you everything. You never short a stock at an all-time high or or when a stock is in price discovery mode, because there's nothing holding it back. That's like everybody for an entire year was rushing, and we're going to move past Google since I just gave you all the levels. Everybody was rushing to short NVIDIA every time it made a new all-time high. When you have to ask yourself, there's no imbalance above holding it that's going to push it down, right? So that's actually when a stock is trickiest to trade, right? That's when you just kind of let a trade ride. Like this is so much easier. Like NVIDIA bears have been freaking out. This move on NVIDIA was beautiful. So again, swing low to swing high. Boom, boom. You got your fibs. These should be your easiest levels. Plot your fibs. Those should be your entries, your stop losses, your everything. Then you can do some other stuff like your bearish and bullish imbalances, pop on some moving averages, do whatever else the fuck you feel like doing, but always start with your fibs. So all this did was retrace down to what? The 382, which is one of the two master Fibonacci's that I tell you guys about all the time. Your 382, your 618, retrace to the 382. By the way, what else was right at the 382, guys? A massive bullish imbalance or a bullish fair value gap, whatever you fucking want to call it. Boom, huge buy there. Boom, 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 boom. Beautiful. Beautiful, beautiful move off NVIDIA. Now you have the 10-day and the 20-day curling back up. I mean, I said this a while ago. This was what I wrote on NVIDIA, and I feel pretty vindicated about it. I deleted it last week because we didn't need it up there anymore. But I drew that. You can find it on my Twitter back in March 8th, 10th time. I said this is what NVIDIA was going to do. Now it looks like if they get past 914, I think we'll see 970 pretty easily too. Pretty fucking easily. Because the next bearish imbalance, the next move that the algos are going to drive us to is this imbalance here, which also happens to be what? A Fibonacci. So there's some major headwind, if you will, dragging us up to this 914 level. That's when things get dicey. But if we get past that shit, the only thing holding us back really is 930. If we get past that, you're going to see like these massive moves where you're like, oh my God, I can't believe we're ripping or dying the way that we are. Well, once this 236 was lost, like truly lost, so bulls retested it here and they were just like, nah, I can't do it. This next day, you should have known exactly where NVIDIA was going to go because there was nothing in between. This isn't enough buying over here because why? Because remember, we were in price discovery mode. We were ripping to all-time highs. So 1-2 candles of buying, there's no support there. There's no buy orders left there. There's a fuck ton of buy orders left here, right? So same thing here. There's some sell orders left up here. So 914 will be hard. But we get past that, guys, I'm not kidding. There's a little bump at 930 and then 970. And then again, what are you in? You're in price discovery mode. Never short at stock that's in price discovery mode. You never short a stock that's in price discovery mode. So, and you guys know me, fibs rule everything around me. So what I will do, because I'm not a bitch and I can handle more than one fib sequence, I will overlay another sequence from this swing high to this swing low, and then these become my upside targets. You know, everybody's question becomes, which is a good question, by the way. Well, okay, we're at an all-time high. What should my targets be? What should my stop loss be? Well, that's why fib extensions and fib retracements exist. So we have this master sequence, which is the overarching sequence that the algos are trading. But remember, we have tiny human brains, and these algorithms have giant robot brains, so they can trade hundreds of sequences at a time. But you at least want to put two on. So here's our swing high. Here was our clear bottom, right? Because what have we done since? We've put in higher lows. So this is a clear bottom. This is a clear top. We couldn't move past it. Swing high to swing low. So then these become your numbers. We get over 970, 1025 becomes the next target. We get over 1025, 1088, 1098, so on and so forth. It's that easy. Don't overcomplicate it. That's the problem. Everybody's trying to sell $1,000 course to sell you guys on VWAP or something fucking stupid. That's why I was going on a VWAP hunt on Friday. Somebody is literally on Twitter selling a course for $1,000 on VWAP. So that's why we keep this room cheap, guys. Okay. I think that's gonna be it, unless anybody else has a chart request. If not, I'm gonna go to bed. Okay. I love you guys. I hope you all have a wonderful night. Let's get after it tomorrow. Let's have a good day. Hope you all have a great night if you're not going to bed. And see you all in the morning. Night, everyone. And if you missed the beginning, guys, this will be recorded and uploaded on YouTube, and you can watch the rest there. See ya.